What if I told you that you don't need thousands of pounds or dollars to start building real wealth? What if I told you that 100 pounds, just 100 pounds, is enough to begin your investing journey right now, today in 2026? Most people hear the word investing and immediately think, that's not for me. That's for rich people. That's for people in suits on Wall Street or the City of London. But that belief is exactly what keeps ordinary people broke. Because here's the truth. The barrier to entry for investing has never been lower in human history. Thanks to fractional shares, zero-commission apps, and smart technology, anyone with 100 pounds or $100 can start today. In this video, I'm going to walk you through exactly how to do it. Step by step, no jargon, no confusion. By the end, you'll have a clear action plan to put your first 100 pounds to work. Welcome to the Wealth Classroom. Let's begin. Before we talk about the how, let's talk about the why. Because a lot of people look at 100 pounds and think, what's the point? That's not going to change my life. And that thinking is the biggest financial mistake you can make. Here's what actually matters. It's not the amount you start with. It's the time you give your money to grow. Let me give you a number that should stop you in your tracks. If you invest just 200 pounds a month starting at age 25, with average stock market returns, by the time you're 55 you could be sitting on over 200,000 pounds. Start at 35? You'd have roughly half that. That gap, that massive, life-changing gap, isn't created by investing more money. It's created by starting earlier. Your 100-pound today isn't just 100 pounds. It's the beginning of a habit. It's buying you time in the market. And time in the market is the single most powerful force in personal finance. One more thing before we move on. In 2026, the S&P 500, which tracks the top 500 companies in America, has historically delivered around 10% average annual returns over the long term. That means money invested wisely doesn't just sit there. It works for you while you sleep. Still think 100 pounds isn't worth it? Let's keep going. Alright, before you open any app or move any money, there are two things you need to sort out first. Skip these and you'll regret it. Number 1, pay off any high-interest debt first. If you have credit card debt charging you 20% interest, investing in the stock market at 10% returns is literally losing money. Clear that first. Always. Number 2, build a small emergency fund. Even 500 pounds to 1,000 pounds set aside in a savings account means that when life throws something at you, a car repair, a medical bill, an unexpected cost, you won't be forced to pull your investments out at the worst possible time. Once those two boxes are ticked, your 100 pounds is ready to go to work. And one more mindset shift before we talk specifics. Investing is not gambling. Gambling is random. Investing in diversified, low-cost funds over the long term is one of the most evidence-backed wealth-building strategies that exists. These are completely different things. Here's what everyone actually wants to know. Where do I put the money? In 2026, there are 4 smart options for beginners with 100 pounds or $100. Let's break them down simply. Option 1, index funds and ETFs. This is the best starting point for most beginners, and even legendary investor Warren Buffett recommends it. An ETF, or exchange-traded fund, is basically a basket of hundreds of companies in one single investment. When you buy one ETF, you instantly own tiny pieces of Apple, Microsoft, Amazon, and hundreds of other companies at once. Popular ones include VOO, which tracks the S&P 500, and VTI, which covers the entire US stock market. Low fees, instant diversification, beginner-friendly. This is where most people should start. Option 2, fractional shares. In 2026, you don't need to buy a full share of any company. Platforms now allow you to buy a fraction of a share for as little as £1 or $1. So if Apple stock costs 180 pounds per share, you can buy £20 worth. Simple, accessible, and perfect for beginners. Option 3, robo-advisors. If you want a completely hands-off approach, robo-advisors like Betterment or Nutmeg in the UK will automatically build and manage a diversified portfolio for you based on your goals and risk level. You answer a few questions, connect your account, and the algorithm does everything else. Option 4, stocks and shares ISA for UK viewers. If you're based in the UK, this is a tax-free investment account where your gains are completely protected from capital gains tax. This is one of the most powerful tools available to UK investors, and you should absolutely be using it. Alright, you know what to invest in. Now you need to know where to actually open your account. For UK viewers, look at platforms like Vanguard UK, Freetrade, or InvestEngine. These are beginner-friendly, low-cost, and allow you to invest in index funds and ETFs with very small amounts. For US viewers, platforms like Fidelity, Charles Schwab, or Robinhood allow you to start with as little as $1, offer fractional shares, and charge zero commission on trades. Here's what to look for in any platform: zero or low fees, fractional shares, a clean, simple interface, and proper regulation. Make sure it's regulated by the FCA in the UK or the SEC in the US. Your money needs to be protected. And whatever you do, avoid platforms that promise guaranteed returns, pressure you to invest quickly, or feel more like a casino than an investment account. Those are traps, not opportunities. Practical tip: download one beginner app this week. Just explore it. You don't even have to invest yet. Getting familiar with the interface removes a huge psychological barrier. Now let's talk about what not to do, because this is where most beginners lose money. Mistake 1: chasing hype. If you saw a stock tip on TikTok, Reddit, or a WhatsApp group, you're probably already too late. By the time it reaches social media, the smart money has already moved. Stick to fundamentals. Mistake 2: checking your portfolio every day. Investing is not a video game. Markets go up. Markets go down. Looking at it daily will make you emotional, and emotional investors make terrible decisions. Check it monthly at most. Mistake 3: trying to time the market. Nobody, and I mean nobody, consistently predicts when markets will go up or down. Not fund managers. Not analysts. Not your mate who knows someone in finance. The strategy that actually works is time in the market, not timing the market. Mistake 4: investing money you might need soon. Your investing money should be money you genuinely won't need for at least 3 to 5 years. If you might need it in 6 months, put it in a high-interest savings account instead. Practical tip: set a rule. Never sell your investments out of fear. Only sell when your strategy tells you to, not when the market scares you. Here's what separates investors who build real wealth from those who don't. It's not intelligence. It's not timing. It's not picking the right stocks. It's consistency. Investing £100 once is a great start, but investing £50 or £100 every single month, automatically, without thinking about it, is how real wealth gets built. This strategy is called pound cost averaging or dollar cost averaging. Instead of investing one large amount at one specific time, you invest smaller amounts regularly. When prices are high, your money buys fewer shares. When prices drop, your money buys more. Over time, this automatically lowers your average cost and reduces your risk. Think of it like this: you don't go to the gym once and expect to be fit. You go consistently, week after week, and the results compound over time. Investing works exactly the same way. Set up an automatic monthly transfer from your bank account to your investment account. Make it the same day as your payday. Make it automatic. Make it non-negotiable. Start with whatever amount you can genuinely afford. Even £25 a month. The habit is more important than the amount right now. Let's bring it all home. In 2026, you have zero excuses not to start investing. The apps exist. The platforms are free. The minimum amounts are lower than ever. The information is right here. All you need is £100 and the decision to begin. Here's your action plan from today's video. Step 1: clear any high-interest debt and build a small emergency fund. Step 2: choose a platform like Vanguard, Freetrade, or Fidelity. Step 3: open an account and invest your £100 into a low-cost index fund or ETF. Step 4: set up an automatic monthly contribution, even if it's small. Step 5: leave it alone and let time do the work. That's it. 5 steps. No complexity. No secret knowledge required. The biggest financial mistake you can make in your 20s and 30s is waiting. Waiting until you earn more. Waiting until you understand more. Waiting until the time feels right. The time is right now. Your future self, the one who is financially free, who has options, who doesn't stress about money, that person is built by the decisions you make today. Start with £100. Stay consistent. Think long-term. If this video helped you, please share it with someone who needs to hear it. Drop a comment below telling me, are you going to open your investment account this week? I read every single comment. And subscribe to the Wealth Classroom, because every week we break down exactly how to build real financial intelligence, one lesson at a time. See you in the next class.